Good morning. It's Monday morning. It's Valentine's Day, and it's the day after the Super Bowl. It's officially the start of spring market in my book. Anytime you get past the Super Bowl in Iowa, man, I tell you, it's just like let everything start up and running here. Hey, if you were a fan last night of the halftime show, I'd like to hear about that in the show notes this week. And if you did not like the halftime performance last night, let me know that as well. Boy, I tell you, it's quite controversial. Also, there was an introduction of a national company starting up, apparently a new real estate firm nationally, and that's all we're going to say about that. So, welcome to the show. My name's Les Solgrove. I'm a realtor with Via Realtors here in Des Moines, and I run this little shop called SimplyDesMoines Stats, where I've been collecting market data for the past, since 2009. So that's 9, 10, 11, 12 or 13 years now. Anyways, so thanks for joining me. Let's jump right into this week's show. So this is week 6 of the year, and this data is collected as of the end of the day, February 13th. So this was collected as of last night and compiled. And this is our weekly dashboard that I start every show with. And there's a couple things I want to point out this time on the dashboard in particular. We're going to talk this week about sale pendings, but one of the things I really want to point out here as we get into the dashboard is look at our listing inventory. 30% of our inventory, or 510 homes, are existing home sales. This is all properties in the MLS, and this is just the existing home section of that 510 homes. And if you recall, last year we were in May when we hit 515, I think it was the all-time low for the year, and here we are just the second week in February, and we're down to 510. In fact, we've actually been below this number, but this is where we were yesterday. And you think that's a tough market to be in. The existing condo townhomes, there's only 71 of those as well out there. So, boy, if you're looking for a condominium townhome property that's not brand new, you've only got 71 of those to choose from in the entire Des Moines Area Association of Realtors multiple listing service. That's a mouthful. Another thing I want to kind of focus on here is off to the right. You notice here this percentage of pending sales. Currently, 52% of all of our transactions that are in the books right now waiting to close are existing homes, and 31% is new construction. And if you kind of look across the way here and you compare that, it's almost a complete flip. 53% of our homes for sale in the market is new construction, and 30% is our existing homes. So talk about a flip-flop here. I mean, we are absolutely upside down in our shortage of listings in the resale market. So a couple of other things here you kind of notice at the bottom. We're still seeing our days on market kind of bubbling up a little bit, and some of that is due to the fact that there's just so few existing home sales out there that the all homes days on the market is kind of picking up, and that's due basically to the new construction and condos kind of bubbling that up overall. But we're at 10 days on the market, existing homes. Expect this to drop down to 7 or 6 as we get into the heat of the spring market. And of course, our months of inventory level, we are well below 1 month once you get into the existing stock of homes. We're at 1,261 homes closed this year so far to date, and we continue to watch that. I'll have a graphic out and an announcement when we hit that 2,000 milestone mark. But I would say don't expect that to happen maybe until that first week of March. It's just kind of that time of year. Our sales don't really ramp up until the first part of March or April, and closed sales are activity from previous month's activity. So our sales that were in sale pending from December and early January is what's making up this 1,261, which is a good segue, because this week's topic is we're going to talk a little bit about sale pending properties, the offer accepted and sale pending. And of course, we all know, sale pendings is that time period between the offer acceptance and the closing day. And this is kind of the fun time of our business when we can go to a closing table and hand somebody a set of keys and congratulate them. So that's really what sale pendings are. But really, what purpose, other than that period of time between the offer acceptance and closing, what purpose does that serve? And really, it's quite an important aspect of our business. The National Association of Realtors, they follow the sale pending data every month. In fact, they put out a pending home sales index, and they've defined this index as a leading indicator of housing activity, which measures housing contract activity, and it's based on signed real estate contracts for home purchases. So that's what it was just written there. But what does that really mean? It's a forward-looking indicator. It tells us what's going to happen in our real estate market as we move forward. If we have lots of home sales that are in sale pending status, we know that we're going to have an increase in closed sales. And it also gives us an indication of kind of how busy or how active the market is. So this month, or this week, I should say, I'm going to talk about looking at the pending sales. And this is a graphic that starts back in 2020. Actually, it says 2021 to present. That's where we're going to kind of focus on. But this goes all the way back to 2020. And you can see that in a typical year, we see activity rise in the spring. It peaks about May or June, and then it slowly tails off each year. And in 2021 here, this is the area we're going to talk about, is the first 6 weeks of the year are kind of what sets the stage as to what's going to happen. How fast does this rise begin? And so here's the first 6 weeks outlined roughly of 2021, and the first 6 weeks roughly outlined of 2022. And what I'm going to do is I'm going to take these two little 6 weeks periods here, and I'm going to overlay them on this next graphic. And this 6 weeks period here is going to show up as a dotted black line, which, well, let's just go to it. This is that first 6 weeks. So it's laid over 2022. And this just gives you an idea that we started off this year actually pretty darn busy. I mean, January, we were going off at a pace that was greater than last year and the year before that. But then we hit a kind of a roadblock. And you know what? Guess what happened about that last week of January, first week of February? We got that cold weather snap. We also had significant snowfall. And believe it or not, in the real estate market, and at least in our market, weather does sometimes have a factor. It plays a factor in our market activity. And what you can see here is that we are now, for the month of February, we're just slightly behind last year. In fact, we're about 125 sales behind where we were at this point in time as of yesterday. Am I concerned over this? Absolutely not. This is just this is just so early in the stages that we, really can't take a lot of stock into that. But if it felt like it wasn't quite as busy as it was maybe that first 3 or 4 weeks in January, it really is. And also it is kind of busy because obviously we're putting more homes on the books. We really kind of increased that quicker, but not at the same pace as last year. So that was the number of units. Let's look at this same data here in respect to the price of the listings at the time they go under contract. And again, this is all homes. So this is not taking into account just existing homes only, or splitting anything out. This is new construction, everything. But this gives you a good overall view. Again, going back to 2020 to present, you can see here that we have this steady incline in pricing. And this was kind of our price appreciation that we've kind of seen the last couple of years. So instead of being, up and down, this last 2 years, we have seen a steady rise in our pricing. And this is the price that the home was at when it went under contract. It doesn't mean that's the one that closed at, because we don't know that until the sale actually closes. But this is actually the price it went under contract at. And let's do that same exercise here, where we take about that first 6 weeks of 2021 and we overlay that to the 6 weeks here in 2022. And again, it's the same line here. This dotted line is last year's activity. And what you're going to see here is that we are consistently about $25,000, $26,000 higher at sale pending price. And a lot of that's just due to the fact that our prices are up from last year. And what will be interesting is to see if we continue this same rise in pricing. My gut is that we are not going to. I think we're going to start to see some softening in prices as we get into 2022, especially as we get near the summer months after the spring market and into the fall. Um, but this just is a good indication that prices are still up, and that's a good sign in a lot of ways. But it's also amazing when you consider that mortgage interest rates are up about a full percent as well from the same time last year. So we'll wrap up the show this week and talk briefly about this inverted market and why this is important. Sale pending data by itself can tell a story, but it's when you include it with other data. So this is where this graphic was born from. This is the green on this indicates the number of homes for sale, and the yellow is the sale pendings throughout the year. And when you get this huge variance, that tells us that the market is extremely active. And of course, since March of 2020, we were in this inverted market. That's where it started from COVID. It actually started about April or May. But man, this was a huge jump over the previous years, this previous year here. And I think we're going to be kind of on that same trajectory, although I do not believe we're going to hit 4,600 pending sales in the pipeline at one time in this coming year. I could be wrong. It all depends on if this trend stops going downward. You can see it kind of goes down as we go into the spring market. If the whole idea here is if we don't have enough homes to sell, you can't add to this bucket because these are kind of replacing up, whatever comes on the market is sitting there, and whatever is sold goes up to this side. And you can see we've kind of got this same trajectory started here, but I really just don't believe we're going to hit 4,600 this year. I think we're also going to see probably as a result, we'll probably see a few less sales in 2022. Not that 17.5 or 17.8 or 18,000 that I predicted isn't reachable, but I think it's just going to be difficult. So anyway, this is the show this week. Thank you for joining me. If you ever have any questions or you want to see a specific graphic, I always encourage you to leave those messages in the show notes. Be sure or email me, text me, and let me know what you would like to see on the show. And as always, I appreciate your kind words I hear weekly. And if you would be so kind as to subscribe to my YouTube channel, that would make me happy as well. So with that, thanks again, and congratulations to the LA Rams for winning last night. And we'll see you all again next week.